Welcome back. We are about to dive into the pillars of US crypto regulation. I'm going to bring our speakers to stage. Do we have everyone here? There we go. Thank you so much. Over to you, Michelle.
Hi, everyone. What a pleasure it is for me to speak to three industry giants who know so much about digital assets. They're the collective wisdom of the US and the global view of digital assets. And on a morning where we've just had a really exciting policy announcement drop in terms of exposure draft legislation in Australia, it's really a fascinating time to speak to Ari Redbord, Ken Chapman, and Nilmini Rubin about what they've sort of seen as being the big industry swings and pushes that have changed the macro environment in the US, and what are sort of the lessons and that we can really take from Australia so that we can sort of get onto the headwinds from the US and try catch up, because I think we're a little behind. So I might just pass on to each for you guys to introduce yourselves and just to give your thoughts on where the US is at now and what do you think Australia can take as like the greatest lessons, given what we've just heard this morning. Ari, do you want to start?
Sure, happy to, and really thank you so much for having me. It's an honor to address this group. I will say I was scrolling through the participant list and see really some amazing subject matter experts and super close friends. I have to shout out Angela Ong from my team at TRM, who I see on the line, and I'm now a little intimidated to get anything wrong here with Angela listening in. As I said, I'm Ari Redbord. I'm the global head of policy at TRM. We're a blockchain intelligence company, spent about 11 years at the U.S. Department of Justice and about 2 at the U.S. Treasury Department before joining TRM about 5 years ago. I try to bring all those perspectives to the conversation. But moving sort of quickly into your question, I think the big takeaway is you can move really quickly. And I know that everyone feels like, I think that the U.S. a year ago felt probably exactly like Australia feels today. We're not moving quickly enough. We're not passing the right legislation. We're not seeing regulatory, action. But the reality is that, like, in the last 6 months, what we've seen from the actual content of what's going on. So we've seen passage of legislation. We've seen pending legislation now. We've seen a 163-page White House report that touches every aspect of the ecosystem. We have a crypto task force. We have a crypto sprint. And as Angela pointed out to me this morning when we were talking, the tone has also changed dramatically. So I think I'll let the other folks kind of chime in here. But to me, the big lesson is like, you can move really quickly to entirely change the game on the way an entire jurisdiction is engaging with the digital asset ecosystem.
Ken, did you want to introduce yourself and sort of give your few thoughts following Ari?
Yes, of course. Ken Chapman, I'm the head of institutional at XDC. XDC is a public layer 1 blockchain. My background is I have 20 years of capital markets experience of traditional finance before moving into DeFi almost a decade ago. And my experience from that includes leading crypto and digital asset initiatives at Wells Fargo. I was an early employee at Anchorage Digital, and also have worked on a number of other projects and joined XDC earlier this year. And just to kind of echo what Ari has talked about as far as what's being seen in the United States, as far as the having a more friendly regulatory environment, what that's led to is just a lot more energy coming from industry. And so what you're seeing on the regulatory side, that's being mirrored on the industry side. There's a lot more investment coming in, where you've seen, for example, with the large banks that were being hamstrung due to things like SAB 21 and also a lack of regulatory clarity. They're now leaning in and have where they had shut down initiatives in the past. They're hiring people. They're spinning up initiatives. And you're seeing industry just in just 6 months, the last 6 months, just night and day. And just talking about just the SEC, I was at one of the crypto roundtables earlier this year, Actually, it was back in, I think, May, and it was really interesting to see the whole tone had changed. Going back a few years ago, if you were in the crypto industry, you were used to having the SEC, issuing subpoenas. At the particular roundtable I was at the SEC headquarters, they were serving ice cream. It was completely, it was actually incredible just the way the tone had changed. And so and then as far as Australia, I wouldn't feel that you're behind, because if the United States can change that fast and have things move that quickly, it can happen in other countries as well.
Thank you so much. Nilmini, do you want to introduce yourself and your sort of few words to start with, and then we can take some deep dive in some really interesting questions.
Great. I'm Nilmini Rubin. I am Chief Policy Officer at Hedera, which is a layer 1 blockchain that has unique technology that's a hashgraph that allows it to go fast and use very little energy. And we have a governing council of big institutions that are well recognized around the world that govern our network. My background has been in policy. I've spent more than 25 years working in Washington, D.C., from the Treasury Department to the White House, and 12 years on Capitol Hill, as well as lobbying and on the global policy team at Facebook, then Meta. So what we are very focused on is shaping crypto policy around the world, and been focused over the last year in the United States, since so much is happening here. And I definitely think that we've felt here in the US that we were behind and watching the rest of the countries moving forward. And that was definitely anxiety producing, especially for policymakers that had a global focus. Seeing American companies go to other countries and seeing other countries start controlling tools of the future economy was really quite terrifying. And what has worked has been, even though the last administration wasn't eager to move forward on crypto policy, that there has been a drumbeat at the staff level to move forward. And they've been working across committees in many different parts of Washington, across party lines. And we're finally at a point where we have solid legislation to move forward. It's been consultative. We've had the benefit of all of these projects working and going through it. I had the chance to testify before Congress on the legislation in the House. But we also have the advantage. So it's a disadvantage that we're late, but we also have the advantage of seeing what other countries did, what's been working, what's not been working, and hopefully we can leapfrog a bit, and maybe that's a lesson as well for Australia.
I certainly get the sense that the US has leapfrog. What you've managed to achieve in such a truncated piece of time, when I look at Europe and MICA, and also what the UK is going through at the minute, you've managed to push legislation through at a much faster rate, also get the policy directive. What do you think is really critical to making the US and ultimately, I guess, other geographies the front runner and ultimately the hub of crypto digital assets? Obviously, we need good capital flows. We need sort of innovative, bespoke sort of legislation and regulatory policy that makes it work. But what do you think, from what you've seen in the US, are sort of like the three critical things that sort of get the momentum and the collective push to sort of get that adoption of blockchain technology and digital assets more broadly?
Yeah, I'll take a crack at that. Look, I think one thing just to really point out quickly, and I think Nilmini got into this at the end of her comment, and that is like, yes, the US is moving very quickly, and it's been a pretty incredible 8 or 9 months. But look, crypto is global by nature, right? The promise of the technology is cross-border value transfer at the speed of the internet. So it really requires consistent frameworks across jurisdictions. And the US has never been a leader here, right? When you look around the world, it's Singapore, it's Dubai, it's Korea, it's Japan, and MiCA in Europe was a huge watershed. Now I think Mika's challenge is implementation, but those rest of those places that I just named are pretty far along in crypto policy making. And I think there's a lot for the US to learn there, but I think there's also a lot of coordination that can go on, whether it's with standard setters or others. So I think it's really, Nilmini got to this, and I think it's just a really important point that like there's a lot of focus on the US right now, and I'm happy to do the victory dance, with everyone else. But I do think it's important to look at those other jurisdictions and say like they really led, when you're talking about MAS in Singapore and VARA in Dubai and other regulators around the world. But I think the things are relatively straightforward, and we're seeing that now. Like builders have always said that they need a speed limit if they're going to drive. I don't know if they care always exactly what that speed limit is, but they need guardrails. They need clarity. And I think that's what Genius does. But really, I think ultimately that's what some type of market structure bill will do. And the US has been so confused about market structure for so long because we have so many regulators. We don't even know who's going to regulate, let alone how to regulate. And I think market structure will solve some of that. But again, like look at MAS or somewhere else in the world where there's one regulator that know exactly what to do and they've put rules in place for it. So I think we're just now working through that. So I think with clarity, we'll see the traditional financial institutions where a lot of liquidity is, as Ken said, start to really lean into the space now that they have rules of the road. So I think it's this combination of two things. I think you want three, and I'll give you a third. But it's really the combination of having clarity and then having capital stay in the US as opposed to the capital flight that we've seen over the last few years. And finally, coming from TRM, I have to say that we have to have, the appropriate guardrails to ensure that the ecosystem is safe. So as we're thinking about building frameworks, they have to come with cybersecurity. They have to come with anti-financial crime. They have to come with the sort of guardrails to make sure that bad actors aren't taking advantage of this transformative technology. I think we have great people at our agencies, to include Treasury and SEC and DOJ, who are really looking to build that today. And those are the conversations that I'm having primarily, all over.
So
Nilmini,
I unsurprisingly completely agree with Ari.
Mm-hmm.
I would add one to his three. He talked about clarity, capital, and guardrails. And then the other piece, I think that's very special to the United States, and at least that we think, especially the United States, is innovation. That we have creators here that are coming up with the new products, and of course, there's innovators around the world. There's very much like a very hungry, eager group of people in the US that see and understand the potential of crypto and that are building on it. And that I think in many ways is the secret sauce.
I tend to agree. Ken, did you want to?
I think that Ari, I think that the two of them have pretty much you asked for three. Ari came up with three, and then we added a fourth one. I think I'm really hard pressed to come up with a number five. I think they did a really good job of covering all the bases there.
From my perspective, I think what we really need is, I guess, political will and regulator appetite to do things differently. I think there's a risk of always adopting what's always been tried and tested and what's worked for traditional products and traditional markets. And I think there's a risk that, I think it was talked about before, this concept of dynamism and taking an innovative approach and taking the risk. I think we need our regulators to understand that the technology is different. It presents different risks. We can't necessarily regulate it the exact same way, but we can build on the regulation of the past. From a US perspective, it looks to me like, and it's similar to here, stablecoins are really going to be the pathway to mass adoption, and particularly sort of the on-ramp to asset tokenization. Ken, I might start with you. Are we going to see every bank issue a stablecoin? Are we going to see tokenized deposits? Are we going to see us think about money differently and how we pay things? This is a very existential question, but I thought we might start there.
Yep, actually, that's a very interesting question. That question is being asked a lot right now, especially in light of the passage of the Genius Act. The stable coins it is the future, especially the ability to to facilitate cross-border payments and to be able to have that happen instantaneously and be able to move value instantaneously. As far as every bank issuing their own stablecoin, that's an interesting question. As far as the Genius Act, part of the Genius Act is that the issuers, there's a loophole here, but the issuers are not able to provide interest. And so if a bank uses another bank's stable coin and they keep it within the bank, then that's going to be that stable coin is not going to have interest if it's within the bank, especially like overnight. So I think at some point, unless the laws change, I think that each bank is going to want to figure out if they're going to have a stable coin, and that stable coin is going to be used for anything payments outside of the walls of their own bank, that they're going to have to figure out how they're going to be able to get a hold and be able to participate in the interest that's being gained by those deposits or those reserves that are being maintained, for the stable coins. There is a loophole where the issuers can work with exchanges and be able to provide interest. But I foresee that the banks, or it's already happening, the banks are lobbying really hard to have that loophole closed. So I think that whether banks each bank issues and I'm talking about the larger banks right now, whether each of the larger banks issue their own stablecoin or not, I think is going to be really dependent on whether or not they can, be able to tap into the interest in the reserves. And we'll see what happens with the laws, and we'll see if the Genius Act at some point in the future gets modified.
I'm really conscious we've got a couple of minutes left. So Nilmini, did you want to jump in, and then we'll hear from Ari at the end?
I agree that there's definitely a lot of talk about whether to change that piece of the Genius Act, but just generally, there's so much excitement about the rise of stablecoins in the U.S. and the potential for it to really transform how people do business, not just across borders, but within the U.S. using stablecoins. It's like people are really getting their heads around what does this mean and what does this unlock for our economy. So I think it's really exciting. I think it's exciting to think about what does this mean for geopolitics and the holders of U.S. treasuries, and what does that mean for power and dynamics around the world. So I think that's a story that has yet to be told, and I'm really curious to see how that unfolds. But I think it's a really exciting moment.
And Ari, what about yourself?
Yeah, no, I think these are
stablecoins, money of the future.
These are great questions, and yes, absolutely money of the future. But I think that the only thing I would really add to this is that we're having conversations today with every large and mid-sized bank in the world, and they are all looking at this issue. And I think Genius helps drive that, but also you're seeing really mass adoption, hundreds of billions in volume. And I think that's also driving the conversation. Customers want access to this. Banks are looking to figure out how to enable it. And I think it's like a really, really interesting conversation. One just like point to put on, I think, a lot of the conversation we've had today and is that like it's all about what governments can do and what they should be doing. But I think the reality, and Ken made this point, is like there's a lot the industry can do without governments getting involved. And I think Australia has done a lot over the years in that way. About 3 weeks ago, TRM announced this thing called the Beacon Network, which covers about 80% of all crypto transaction volume, to include crypto.com, blockchain.com, Coinbase, Binance, OKX, Kraken, Robinhood, PayPal, Stripe. These are all industry players coming together with global law enforcement, including Australian federal police, who have really leaned into this work to say, hey, how can government, public sector, and private sector work together to stop bad actors, but led by the private sector here? We can do things in crypto as an industry that you can't do in traditional finance because of the nature of blockchains. And I would encourage sort of the ecosystem to continue to build cool stuff with or without the government, and maybe lead the government along in certain instances. Like the government will follow great innovation, great work by the private sector, hopefully.
Thank you all so much for your time. It's really wonderful to get your insights on, I guess, regulatory reform and how quickly one can move when there's the political will and might and the beating drum of those who've been pushing for it for quite some time. So I appreciate it all. I'm going to hand back to Amy Rose, and hopefully we'll see you all soon.
Thank you so much.
all so
Thank
much.
you.
We are going to continue beating that drum. Thank you, Michele. That's a phrase I'll be using from now on.